Hi, I'm Anthony Diosdi. I'm a tax attorney in San Francisco with over 20 years experience in international and domestic tax planning and tax litigation. You can find me at sftaxcounsel.com. Today we're going to be talking about the Form 5471 and the category of filers for the Form 5471. So, what is the Form 5471? The Form 5471 is used by U.S. persons with respect to foreign corporations that can be classified as officers or directors or shareholders of a foreign entity that can be classified as a corporation for U.S. tax purposes. The 4471 is also used to calculate the U.S. income tax consequences to a U.S. shareholder of the foreign corporation. And the most common type of income tax consequences someone would have in relationship to a foreign corporation would be a tax regime known as GILTI or Subpart F income. Now, there is approximately 12 schedules that are attached to the 5471. And in order to determine what schedules that an individual has to attach to the Form 5471, to determine what category filer they. So if you are either preparing your own Form 5471 or if you're a tax professional preparing a Form 5471 for your client, the first step is to kind of determine what category filer that we are dealing with. So today, what we're going to be talking about is the different category of filers. Now, I will be making additional videos that will go through the different schedules of the Form 5471, but for purposes of today's discussion, we're just going to be talking about the category of filers when it comes time for filing the Form 5471. Now, before we move on to the different category of filers and what they mean and how you make a determination of what somebody is for purposes of a category filer for the Form 5471, there are some really important terminology that we need to go through. All right. So the first term that is very, very important for purposes of preparing the Form 5471 is the, the term U.S. person. And a U.S. person is important for purposes of filing the Form 5471 because only U.S. persons have a obligation to file a Form 5471. So, what is a U.S. person? Well, a U.S. person is either a U.S. citizen or a tax resident of the United States. What is a tax resident of the United States? That is somebody who has a green card. If they were awarded a green card by U.S. immigration authorities, that individual for that particular year will be a U.S. person for purposes of the Form 5471. So if you have a person that was in the US and they satisfy the so-called substantial presence test, if they satisfy the substantial presence test, even if they don't have a green card, even if they're not a US citizen, then they would be a US person for purposes of the Form 5471. Other types of categories of a US person would be a domestic partnership. That is a US person. A domestic corporation, a domestic trust, or an estate. These are all entities that could also be classified as a U.S. person for purposes of the Form 5471. Now, not only do U.S. persons have an obligation to file a Form 5471, but for purpose of the Form 5471, we also have to understand the concept of U.S. shareholder. U.S. shareholders, basically your building blocks to determine whether or not a foreign entity itself can be classified as a so-called controlled foreign corporation, which we're going to define in a minute. But a controlled foreign corporation has an obligation to file a Form 5471. And to determine if we have a controlled foreign corporation, we have to start with defining what a U.S. shareholder is. All right. So, what is a U.S. shareholder for purposes of us determining whether or not someone has a Form 5471 filing obligation? In Revenue Code Section 951 B defines a U.S. shareholder as a U.S. citizen, as an alien, corporation, partnership, trust, or estate that owns 10% or more of the total combined voting power of all classes of shares in the foreign corporation, or 10% or more of the total value of the outstanding stock of the foreign corporation. And when you're making a determination whether or not that 10% threshold is satisfied, you have to consider all forms of stock ownership. And when I say all forms of stock ownership, I mean direct, indirect, or constructive. And we'll define those in a minute. But when you're determining whether or not you have a US shareholder that satisfies this 10% threshold, you have to go ahead and apply a direct, indirect, or a constructive ownership type of a test to determine whether or not you have a 10% ownership in a foreign corporation. Only a controlled foreign corporation has an obligation to file a Form 5471. Well, should I say only a controlled foreign corporation, and in some cases, US persons that are officers or directors of a foreign corporation. We'll talk about that in a minute. But whenever you have a controlled foreign corporation, and in some circumstances, when you have a US person that is a director or an officer of a foreign corporation, do you have a obligation to file a Form 5471? So what is a controlled foreign corporation or a CFC? Well, a CFC is a foreign corporation that at any time of the year, you have a group or an individual of US shareholders that own more than 50% of the total combined voting power of all classes of the foreign corporation's voting stock, or more than 50% of the total value of all of the foreign corporation's outstanding stock. Do you have a CFC or controlled foreign corporation? So that's going to be your minimum threshold to determine whether or not you have a CFC and a Form 5471 filing requirement. When I talk about a controlled foreign corporation, let's just say you are getting ready to prepare the Form 54. You're getting ready to determine whether or not you have to even file the Form 5471. You have to make sure that when you are dealing with a foreign corporation, that that foreign entity itself is classified as a foreign corporation for U.S. tax purposes. Now, you might be dealing with a foreign entity that you might believe is a corporation, but don't automatically assume that the foreign entity itself that you're dealing with is going to be classified as a CFC for US purposes. And what you're going to have to do is to look at the Internal Revenue Code's regulations and look at Treasury, Treasury Regulation 301, 301-7701-2B8. What this Treasury regulation does, it defines whether or not a foreign entity can be classified as a U.S. corporation, or just say this Treasury regulation will determine whether or not that foreign entity itself will be classified as a foreign corporation for U.S. purposes. Now, just because the entity itself has a a wording of a terminology, or a statement afterwards that says limited or SA or LTD afterwards, that does not automatically mean that that entity itself is going to be classified as a foreign corporation for US purposes. Look at the regulations, and if under the regulations that foreign entity itself is listed as a so-called per se corporation, then if it's classified as a per se company under the regulations, that foreign entity is listed, then you have to go ahead and that Form 54 so that entity is classified as a CFC. If the entity itself is not listed as a per se corporation, a per se entity, then you're going to have, or should I say, you may have a filing obligation, but it does not necessarily mean it's going to be a CFC. Now, if the entity itself has certain characterizations, you can make an election to treat the foreign entity as a corporation for US purposes. But in any event, don't automatically assume that a foreign entity itself is going to be a foreign corporation for purposes of US tax law. Always check your regulations, the proper regulations, to make sure that that entity itself is going to be classified as a foreign corporation for US purposes. And if it is, then you move forward with preparing that Form 5471 if it is a CFC. Another important term to understand is the term called a SFC, or a specific foreign corporation. What is an SFC? Well, an SFC is either going to be a CFC or it's going to be a foreign corporation where at least one US shareholder is going to be a domestic corporation. That is going to be an important term, and we're going to be discussing in a minute why an SFC is important. Now, earlier I mentioned that ownership through a foreign corporation can be done in one of three ways. It could be direct, it could be indirect, or constructive. So, what does direct mean? Well, direct means that you could own a foreign corporation directly. So, what's an example of that? Let's just say you went ahead and you purchased stock in a foreign corporation and you held that stock in a foreign corporation. That is a example of owning stock in a foreign corporation directly. That is the most simplest way of owning a foreign corporation stock. All right. And that's if you see that that is going to be the easiest way to determine whether or not someone's going to be a US shareholder, whether someone's going to be or an entity itself be classified as a CFC. But in areas of international tax, it's not always that easy. You could also wind up owning shares of a foreign corporation indirectly. How would you wind up owning a share of a foreign corporation indirectly? Well, an example would be, let's just say you own shares of a domestic corporation, and let's just say that domestic corporation owns shares of a foreign corporation. This is an example of owning a stock in a foreign corporation indirectly. You could also own stock in a foreign corporation indirectly, say through a trust or through a domestic partnership. And the way the Internal Revenue Code works is that your proportional ownership of stock in that domestic entity, whether it's going to be a corporation, a partnership, or a trust, or even or an estate, for example, that percentage of ownership would wind up basically being imputed to you to the amount of foreign stock that entity winds up holding. Now, the last way you could wind up owning stock in a foreign corporation is constructively. Now, the rules regarding constructive ownership can be extremely complicated. I could basically make a 6-hour video just discussing the constructive ownership rules. You can wind up constructively owning stock through an entity, but the most common way of owning stock in a foreign corporation is through a family member. So let me give an example. Let's just say you have a US person father, and let's just say the US person father owns 6% of the stock in a foreign corporation. Now, let's just say the US father has a son, and the US father's son owns 5% of stock in a foreign corporation. If you add the two of them, those two numbers together, the 5% and the 6%, between the father and the son, they now own 11% of the outstanding stock in that foreign corporation. So, under the constructive ownership rules, you would wind up imputing the ownership between the two of them to determine that they are going to be classified as US shareholders. Why? Because they have an attribution, their family relationship attributes to them together the ownership of the foreign stock, And now in this case, because they both own in the totality more than 10% of ownership in that foreign corporation, they will both be classified as US shareholders. All right. So whenever you're making a determination whether or not someone's going to be classified as a US shareholder or if an entity is being classified as a CFC, always look through your three categories of ownership: direct, indirect, and constructive. So now, since we got the basic rules down pat, let's go through the category of filers. Now, you have five category of filers, and determining whether someone falls within a category of a filer, as I alluded to earlier, is very important because it determines what schedules that needs to be attached to that Form 5471. And this is very important, well, one, because you want to make sure you're preparing the Form 5471 correctly. But two, you have to understand something else too. If the Form 5471 is not prepared correctly, there are substantial fines. The fines for preparing an incorrect Form 5471 start at $10,000 per year per entity, and they can grow as high as $60,000 per foreign corporation per year. Plus, you can also have a reduction of foreign tax credits in the amount of 10%. If right off the get-go, right off the bat, say you are not preparing the proper schedules for the Form 5471, the IRS can automatically assess penalties against you. So very, very important to make sure to start that you are looking at these filing rules, these category filers, to make sure that you got it down pat. All right, so start with category one. What is a category one filer? Well, a category one filer is basically going to be a U.S. shareholder in a foreign corporation that is an SFC at any time during the corporation's taxable year. All right. Now, when you're looking at your category one filer, your category one filer is broken down into three subsections. You have your category 1A, you have your category 1B, and you have your category 1C filer. Your category 1A filer is basically going to be your catch-all, right? So if that foreign corporation was an SFC at any time of the year, you're going to be a category 1A filer. So you're almost automatically going to always have if you have an SFC, you're automatically always going to have a category 1A filer for purposes of the preparation of the Form 5471. Now, 1B is when you wind up having a situation where it's an SFC, but there is a indirect ownership situation. When you have an indirect ownership situation, you might have a situation where you have a category 1B filer, and a category 1C filer is when you have a situation where you have a constructive ownership uh, type of ownership in the foreign corporation. That's how you make a determination whether or not you have a 1A, 1B, or 1C filer. Let's now move on to category two. What is a category two filer? Well, a category two filer is a U.S. person who is an officer or director of a foreign corporation in which there has been a substantial change in U.S. ownership in the entity. Whenever you're making a determination, whenever you're analyzing whether someone's a category two filer, there's two parts that you need to look at. So the first step is, what's a officer and director of a foreign corporation? Well, if someone knows what that is, they need to let me know, because the regulations and the Internal Revenue Code do not define that term officer or director for purposes of category two filer. So you're really gonna, if you have a situation where you think someone's gonna be an officer or director, you're really gonna have to kind of dig in and kind of see if maybe some parts of that Internal Revenue Code or somewhere in US case law, you could define whether or not whether you're dealing with yourself or whether you're dealing with your client, whether or not that individual be classified as an officer or director of that entity. This could be a problem in many circumstances where, let's just say you have somebody who's working at a foreign bank as an officer or director. This could actually be a catch-all. This could bring a lot of people into having an obligation to file a Form 5472, and they don't even know it. Now, the second part of this analysis is, was there a substantial change in U.S. ownership? So, what is a substantial change? Well, a substantial change is when you have a block of 10% or more ownership of that corporation itself being acquired by a U.S. entity or a U.S. person. And it only goes upwards, never goes downwards. So if there's an additional 10% block in ownership in the foreign entity, and you have a U.S. person that's an officer or director, then you may have a category two filing requirement. Now, when you're applying these rules, always look at your direct, indirect, and constructive ownership rules to make a determination whether or not you have a U.S. ownership for purposes of triggering that 10% block. All right. So be really careful when you're doing your analysis to make sure if that's triggering. Okay. So let's move on now to category three. What is a category three filer? So a category three filer is a U.S. person who owns stock in a foreign corporation if any one of these following events occur during the taxable year. Number one, the U.S. person acquires stock in the corporation that, when added to any stock already owned by the person, causes the person to own at least 10% by vote or value of that corporation. Number two, the U.S. person acquires stock that, without regard to any stock already owned by the person, constitutes at least 10% by vote or value of the corporation's stock. Number three, then it becomes the U.S. person becomes a U.S. person while owning at least 10% of the vote or value of that corporation stock. So, how does that happen? Let's just say if during the year you have a US person that acquires at least 10% of voter value because they become a US person because they get a green card awarded to them. Or let's just say they become a US person because they satisfy the substantial presence test during the year. That's how you'd wind up satisfying that prong of the category three filing requirement. Now, number four, if a U.S. person disposes of sufficient stock in the corporation to reduce that person's interest to less than 10% by voter value of the corporation stock. So remember, we talked about category two. I said it for category two purposes, you're only going to have a category two filing requirement if there is an increase in ownership by a 10% block. So for category three, you could have a decrease in ownership by 10%, and you could have a category three filer. Now, the other difference between category two and category three filers is that you don't need a situation where you have a US person that is a officer or a director of a foreign corporation. And then finally, the last prong to category three filing requirement is the US person owns at least 10% by vote or value of the corporation stock when the corporation is reorganized. All right, now, when you determine your category three filer requirements, for category three purposes, you're going to have an addition. So not only do you have a US citizen, a US resident alien, a corporation, or an estate or a trust that could become a category three filer, but category three filers are expanded to include US persons that are Puerto Rican residents or bona fide residents of a U.S. possession. All right, so keep that in mind when you're making determination of whether or not someone is a Category 3 filer. Okay, let's move on now to Category 4. What is a Category 4 filer? A U.S. person is a Category 4 filer with respect to a foreign corporation for a taxable year if the U.S. person controls the foreign corporation. What does control mean for purposes of Category 4? A U.S. person is considered to control a foreign corporation if any time during the year such person owns more than 50% of the combined voting power of all classes of the foreign corporation's voting stock, or more than 50% of the total value of all the foreign corporation's outstanding stock. All right. So when you're making that determination, once again, whether or not someone is a Category 4 filer, look to see if that person controls the foreign corporation stock either through vote value. And for Category 4 purposes, you're going to have to go ahead once again and look at not only your direct ownership rules, you look at your indirect ownership rules, and you'll also have to look at your constructive ownership rules as well. You have to do that test to make a determination whether or not somebody controls 50% or more of the corporation by stock, by vote, or value. Okay. Now, let's move on now to the final category. And the final category is a Category 5 filer. So, a Category 5 filer is a U.S. shareholder of a foreign corporation that is an SFC at any time during the corporation's taxable year. However, to be classified as a Category 5 filer shareholder of the CFC must also own the CFC's stock on the last day of the CFC's taxable year. So, like the Category 1 filer, the Category 5 filer is broken down into three subsets, so to speak. You have your Category 5A, Category B, and Category C filers. Your Category 5A filer is basically going to be your catch-all. It's going to be basically anybody who was a shareholder of the CFC and it was the shareholder of the CFC on the last day of the year. When you look at your classification for a B filer, you're looking at owning shares through an indirect situation, and then your 5C filer is going to be holding on to shares of the CFC through constructive ownership. Okay, so that's going to wrap up our discussion on the category filers for purposes of the Form 5471. This is meant to be an introductory type of a discussion. Whether or not someone is a category, whether or not someone is a Category 1, 2, 3, 4, or 5 category filer could be an extremely complicated exercise to determine because of your constructive ownership rules and your indirect ownership rules. Always make sure that you are consulting with a international tax attorney who understands the preparation of a Form 5471. And finally, this discussion is not meant to form an attorney-client relationship. If you have a client that needs assistance with the preparation of a Form 5471, or if you're preparing your 5471 and if you have questions, it is strongly urged that you reach out to a qualified international tax attorney to advise you how to correctly prepare the Form 5471.